Trust but verify. That's our motto. Because even really good operators, best in class operators, if they have really good track record, and by the way, the track record of the operator is the most important thing. That the team is the most important aspect of everything, right? You bet on the jockey, not the horse, right? For all the best in class operators, if we still evaluate the individual investments, the individual deal, and there has been times that the deal did not work out with us, and we have said no to that deal. We have investigated in so many deals in past couple of years, and we have rejected some of these investments, but these investments still went out and raised capital from different investors. So the investors will never know what that difference is, but it is a tremendous value for them.
Hi, Madvi. Welcome. Let's get right into the question. So, who are you and what is Connected Capital?
Love it, Adrian. First of all, thank you so much for inviting me. I am Madhavi Jain. I'm founder of Connected Capital Fund. It's a community of fund managers by fund managers. And the reason I say that because, I'm a fund manager, real estate fund manager myself. I have a diversified real estate fund where I bring investments for my investors. And I also, while doing my own strategy, capital raising, I faced quite a few challenges there. So while I was facing these challenges, I thought of, let's bring this as a community and let's try to solve these problems together. So that's where Connected Capital, kind of that vision started. And me and my, ex co-founder, Bobby Sharma, we joined our hands and started this community. Bobby has moved on to something else now, but, we still run this community nice and strong. This community is for fund managers solving their problems about, first of all, best in class operators, finding them together, doing the due diligence together, raising capital together, bigger and better raise, and bringing that better economics together as a community.
Yeah, that's only something that someone in the space would see this niche, right? Because it almost seems like you have to be in the space to actually see this problem. Granting, the current state of the market and everything that's changed, what do you see is the biggest challenge that, the community helps solve right now?
Wow, such a great question. I think in this market, it has been really hard to raise capital. And as an effect, what has happened is that there is a quite a bit deal flow, Adrian, and you have seen it even in your portal, right? There's a lot of people who are raising capital, who are creating deals. So what's happening is there's quite a bit imbalance of, deals that are in the market, but at the same time, good deals in the market, right? So there's plenty of deals. There's a lot of deals to raise capital on, but as a capital raiser, to pick and choose the good deals out of it. And by good deals, what I mean is that really thorough due diligence, kind of, trust but verify based on what that operator track record is, what the merits of that particular deal is, because not every deal that gets funded should be getting funded, right? When it comes investors, kind of challenge first, right? So with that perspective, I almost want to say that there are so many deals in the market that there are no good deals. So that is the biggest problem that we are solving, that finding the good deals, because as a capital raisers, we technically do not have control over the deals. So
Mm.
now we want to put our name and our reputation to something be worthy of putting in front of our investors, because quite honestly, putting a deal in front of our investors is a quite a bit responsibility. That due diligence, that's a quite a bit responsibility. I don't know how many people raising, and especially in front of fund, style, are giving that importance to the due diligence. So that's really the problem. It's to get good deal with the deep due diligence, collaboratively done together, and putting it in front of investors. And with that, there are of course other solutions that gets created with the Connected Capital.
Awesome, awesome. And you mentioned a ton of like deals. Out of curiosity, what is the composition of the community? What industries are they in? Are they fund managers? Are they operators as well? Can you break that down for us?
So yeah, quite a few, quite a few are capital raisers, ex syndicators, and they come from mostly real estate backgrounds, mostly multifamily. But these are the ex syndicators. I mean, I have been the ex syndicators, ex syndicator too, right? I have done acquisition, I have done asset management, but I have decided, everybody comes to that fork where they decide what their path is going to be. Do we want to go in the acquisition route, or do you want to go to the capital raising route? So I chose that path, and many of our members chose that path too. So we have a clear distinguishing that if you want to be raising capital on somebody else's deal, then there is a membership, and that's the gold membership, which is only for capital raisers. We don't allow sponsors to be in the membership area unless they want to raise capital on others' deal. And there's a kind of a benefit for that as well. We can talk about it if we get time. And the second level is the sponsors who are trying to raise capital, and they are not the members. However, they can submit a deal and they can present the deal to the community. So
Mm.
those are kind of the distinct kind of relationships there. And because of that, the core of it, the members are mostly capital raise partners. There are some syndicators who also wants to raise capital on others deal. Most of the experience do come from the real estate, but diversified asset classes, mobile home parks, self storages, because most of us want to provide that diversification to our investors, right? We occasionally have some people who are good into evaluating businesses, some kind of startup. They have invested in that too. But whatever their experience is, I think collaboratively, when we are looking at a deal, and if say an asset class which is may not be your expertise, if you are a member, say a self storage comes up, and somebody else has that experience, that collaborative due diligence, that collaborative expertise, it what creates our stronger strength together.
Yeah, that's awesome because I mean all asset types are in cycles, so you want to provide that diversification to spread that risk. So let's dive a little bit deeper on that one because you mentioned there's two types. Your site mentions there's a you want to do a collaboration while maintaining autonomy. Can you
Yes.
explain what does that mean and how does your platform help accomplish that?
That is a very, very, very important thing to know, right? Because see, when as a community, now we have access to the best in class operators, right? And why it works, because see, I'm connected to five really good operators, right? You are connected as a member to five different operators. Somebody else connected to five other different operators, right? In different classes. Now we are connected. Our grapevine of this connection is huge, right? The best in class operators bringing the best in class deals to our platform. We do the collaborative due diligence together. Now, connected capital does contribute in terms of providing third party underwriting. So
Mm.
every deal that comes in, and most of the times the asset classes are very kind of different asset classes, right? A lot of times we are able to provide that underwriting, but there will be some situations when that expertise is not available, but we try, right? So the underwriting, the third party underwriting, though we are all expert at that underwriting, that third party underwriting creates that third perspective, right? And we also run background checks before we raise capital on those, right? Rest of the due diligence now over the period of like years, I have created a 240-point checklist. Mostly it's applicable to multifamily, but it is applicable to other asset classes as well. So once we divide and conquer, somebody picks up a legal, somebody picks up, say, a debt, somebody picks up market research. Once we collaboratively do the due diligence, now we have kind of a go no go call where we decide that okay, if this is an investment we want to go in, does it have either of risk managed returns? And if yes, we decide that okay, we are going to go into deal. Now here's where the autonomy kind of comes in picture. Now if you're a fund manager and you've participated in due diligence, say 10 people participated in the due diligence, and 8 of them thought that okay, this is something that I can go and put it in front of my investors, but the other two had some kind of assumptions or some kind of criteria that still does not kind of rhyme or gel with them or
Uh,
their approach or their conservative thinking for their investors. They can step back, they can say okay, I don't want to raise capital on it. So it's kind of collaborative. We bring that expertise, that EQ and IQ together. But if you don't want to raise capital, you're not forced to raise capital on them. If you participate, though, you can take your direct check, put it into that investments. And if I'm a fund manager, which I am, as I told in the beginning, think outside the stocks is my company and my fund. And if I participate in that deal, and suppose you are a fund manager and you participate in that deal, we get
mhm.
both of us get the better returns. And that's another important aspect of it is the economics of it, the better returns,
Yeah.
right? When somebody raise capital, say 500K, and the better class is, typically the classes are like 50K, 500K, 2 million, right?
Yes.
So our effort is to go together with the separate checks to that 2 million class. So anybody who raises whatever amount gets that 2 million. So somebody who raises say 400K and somebody who raises $1 million too, they both get that bump to that 2 million level, right? So that's the beauty of it. You get those returns directly to your fund that you can pass to your investors. But going in or not, that's your choice.
Awesome. Awesome. As the name implies, connected capital, I'm curious, how do you source or find either members or potential offerings or deals for the community?
Wow, that's a massive, like a twofold question, right? So let me answer for the deals first, right? As I was indicating earlier, that if I'm connected to five really good sponsors, you're connected, and we have kind of a community of fund managers who have these really strong connections, some things that they have built over the time. So a lot of our deals come from that network, because as a
Mm,
grapevine, we know a little bit lot, right? When these partners come and present, and we also hold like a behind the door, behind the curtain, closed door conversations where we get to learn a lot about, like through the grapevine, the good, bad, and ugly of the partner, the operator, and even the investment, right? So that is one source. Connected Capital also have been kind of, just organically from word of mouth has reached to many sponsors. So we do get, different sponsors reaching out for us. Kenny McElroy had come and presented to us. Scott Mayer from self, the self storage that
yes.
he also came in and presented to us. So we get like a big best in class partners, because when we are not doing the deals, we want the best in class operators who are doing
Mhm.
those deals, right? So quite a few good multifamily operators also come to us. So that's this, kind of a source of our operators. Whenever there is somebody new who hasn't been introduced to community on our website directly, they can submit a deal. Our investment committee meets every week, and we kind of screen those deals. So when we have somebody present on our Connected Capital Fridays, by the way, we meet every Friday, 11 CST, and we have these presentations. So this is a pre-screen. We look at it, we see if it is a right fit or not for the community, for the fund managers, what kind of economics they have it. And that's when we actually, allow them or have them come and present to the community. And once they present to the community can ask the Q&A. Again, the sponsors is getting a good spotlight, because this is about 1 hour of like focused presentation from them. Q&A is not the retail investors asking them questions, but really good fund managers, experts asking that questions. So that's the source for the sponsors to come in. And if you want to submit a deal, that submit a deal button on the website is available. As for the members, right? One of the source is this interview here, this podcast here. And thank you so much for giving this opportunity, because Connected Capital is, what we are doing, trying to do together, trying to solve the problem. It's quite a bit niche. There are many groups, there are many platforms who are trying to do this collectively, but our core, our soul is where the due diligence is. We
Yeah.
spend quite a bit time in doing the due diligence, because like I said, when we are putting our reputation, our name on that line, we want to make sure that this particular investment is really something our investors, it is really keeping their interest in mind, right? Now
Yes.
we cannot eliminate all the risk, but even if we can like not step on some of the blind minds that are out there, that's good enough. The good deal that you do is the deal that you don't do.
Yeah.
That's really important to know, right? So that's how we are spreading the word. We have organically grown to quite a bit now, but that's we go to different conferences, we explain what we are, and the fund managers who have been looking for this kind of solution to solve their pain points, to get that best in class deal flow, to have the due diligence. And the last benefit that I would say is the economics, right? Now, Adrian, you run a portal, right? You know that the fund managers, when they want to create the SPV or the customizable fund or flex fund, whatever, they actually have to go through a lot of expenses, right? There
Hmm.
is legal expenses, there is ongoing expenses. Also, some of these are in the masterminds, and they spend a lot of money. So for fund managers, the choke point is what is the cash flow coming to them. And let me elaborate a little bit more here, because as a fund manager, you might get something in the front upfront, but most of your deal is going to be in the back end, in the
Yes.
promote. That means you have to wait for that 3 to 5 years for the investment to materialize, realize its gains, and give you that equity back, right? So I always say that the fund managers are kind of equity rich but cash flow
Cash
poor,
flow.
right? So when when you go to that better economics with, that $2 million, now you are, I try to negotiate with operators. Again, when I mean negotiate, it's not like trying to squeeze out of the juice of the operators, but trying to find that balance where they understand that this is a problem from fund managers and this is how we can solve it, right? So it's almost like a three-legged stool where the fund managers are getting benefit, the sponsors are getting benefit, and the investor in turns are getting really, really good quality, quality investments, right? So that's how we reach out. Our community, people in the community talk very passionately about the community and what we do there. And this is a different way that we get our fund managers from different sources.
Yeah, and I think you mentioned something key there. In this space, it's almost like if you're always in the room,
Mhm.
you would almost know the people who are always there. So if you rub shoulders with one or two people, they more than likely they know all the other.
Yep.
And you said you only filter out high quality operators. If you know one or two of them, more than likely they would know the other ones, and they would make the introduction. So good point. Earlier, you also mentioned, in my opinion, is one of the biggest hurdle or feature or benefit is
Mhm.
vetting or minimizing the risk. You also
Right.
mentioned earlier a 240-point checklist. Can you maybe give us a condensed? What is your vetting process look like in the community?
That's a great question. So first of all, I was talking to you about the investment committee, which meets every week. This is like a core group of few handful of fund managers who look at these submitted deals that are submitted from the website, or we get kind of references or coming from the different sources, right? So this vetting has about maybe a condensed version of it, right? It's like 20-25 points. Something like do they have just looking at, I'm going to go nitty gritty details here. Maybe the pref equity, what is the pref equity balance? Does it have? Do they have that? And it's not wrong to have it, but if it tips the balance when it comes to the actual loan to value ratio from the loan, that's something we can rule out early in the way, right?
Hmm.
The second could be rent growth for projections, for example, right? I mean, rent growth has been negative or zero, and somebody who is having aggressive rent growth in their projections, now 1% rent growth can literally flare up your
Oh
IRRs,
yeah.
right? The exit cap rates, right? The entry cap and exit cap. What is the gap between that? So these are the, well, like a primary questions that can help us rule out quickly that, hey, this is not gonna come close to our conservative criteria. The second kind of a quick check is not having a fund of fund class, right? Some investors, some investments, some sponsors are really great, but they don't have a fund of fund class. And if they have already created their PPM, if they have already in middle of the capital raise, you cannot create something like a class in middle of the PPM because people have been
Mm.
signing those, right? So in that case, it's not like we don't work with them. Maybe we won't be able to work for that particular investment, but we always educate our sponsors that, hey, this is how you can structure, for a 50,000 investor, 500, 2 million, this is how we can structure and give more benefit for the capital raises coming as a fund of fund managers. Now, fund of fund is a very important aspect of it, right? Many of us have been co-GPs, and we know that the co-GP is not a kosher way. SEC does not like it. So creating fund of fund is very clear. Very clearly, you tell your investors that this is what your gain is going to be. This is what you're going to pass to the investors, right? Now, going to the due diligence process, this screening happens. They're presenting these deals on Fridays. On Fridays, again, the experts who are the fund managers, ex syndicators, they're asking deep dive questions. Now, this I cannot begin to tell you the importance of being in this room because these are the experts in their area. And every now and then, when I get like really amazed by a question, myself being in part of this community for 2 years, I feel like I'm learning new every time because I my expertise, my deep due diligence come from multifamily and even other asset classes. And when sometimes I ask questions, somebody else can get surprised that, oh, okay, she has thought of something different that I didn't think
Yeah.
about, and I can feel the other way too. So this is a very important room. By the way, this is the Friday meets. You can come and join on our Connected Capital Fridays to just get a feel of how it looks like. Right now, we request the sponsor team to leave the room, and now we do the closed door conversation. That's where we talk about the good, bad, ugly of the investment itself, sometimes the market, and also the sponsor team. And through the grapevine, over the period of time, Adrian, I have realized that so much information comes out to the grapevine. Somebody knows about something, right? So after that, if 3 to 5 fund manager raise their hand, or if there is enough interest to raise that capital, we take it to the next level, which is the deep due diligence level, right? So now the deep due diligence level consists of one kind of a quick check and then the deep dive, right? In the deep dive, we are going to divide and conquer this 240-point checklist. But before that, even my our fund managers start spending hours of time on it. We want to make sure that this is worthy of going in the next stage or not. And
Mm.
that check is the underwriting. The financials can uncover and unravel so many aspects of it. It's kind of poking holes into it. And our underwriter, we have, trained him over the period of time to look at deals in certain way. And what we do is we actually try to poke holes on it. And let me explain. What it means is that we create a list of conservative kind of assumptions and look at the things that the sponsor has not been conservative or slightly, little aggressive. Now we're going to apply all these conservative assumptions and see how can we push back this IRR and how much it gets pushed back, right? Now something which is a 2x return, 15-16% IRRs, if we push back, it's kind of its own stress check of like applying all those things at the same time. If it goes to like 3-4%, then obviously there's a lot of risk, right? But if it
Yes.
gets pushed and it gets to like a good like 10 to 12%, that means that, even after all these conditions apply all together, it's still, it's not losing capital. It's 10 to 12% returns to the investor. So it's risk managed. So we do a very calculated risk managed kind of analysis to start with, right? And now all these assumptions, if one or two are gonna, apply when it's time to exit, maybe this is what the implications are. That's what we are trying to identify. Now
Mm.
that third party underwriters kind of review, that's what gets discussed in the insider calls, which are, the gold community gets access to these insider calls. And the insider calls is really where the rubber meets the road. Now once this review is done, if it is not worth to go forward, we just respond back that, hey, we're not going to move back. And we do provide feedback because the sponsors will get benefit from that as well, right? And
Yep.
if it does move forward, now we divide and conquer, and we have people who are experts in some certain areas. Like for example, we have, somebody who has been appraiser in her life, and she has, so much exposure to commercial, commercial real estate. Now she takes care of, market analysis most of the time. Somebody's going to jump into legal analysis. Somebody's going to jump into looking at the debt. Somebody's going to look at, the physical due diligence report, screening through it, identifying that, okay, what is the capex budget that's needed and what are they allocating capex. Somebody, I mean, having kind of a geographically diverse, the advantage is somebody is going to be close, not always, but if somebody is close or do 2-3 hours of driving distance, whether they're raising capital on that or not, we end up going to that property, do
Visit
the
the site.
physical tour, right? Do where look at where particular property is, and trust me, even a bridge, a freeway separates, two areas by half a mile,
Mm-hmm.
but the right side of the freeway and left side of the freeway is going to have completely two geography, right, with completely two demographics when it comes to who are staying there, right? Even if you get a rent com which is 2 mile radius, and if it has a freeway divider, that's the thing that you can identify, by looking at it, by looking at the property itself. So that's how we divide and conquer and do the due diligence. And like I said, then on the next insider call, when the due diligence is complete, we're going to come together, we're going to discuss the pros and cons. And now if it is going ahead, there is an autonomy that people can decide whether they want to go ahead or not. And then we get a soft commit from the fund managers and collaboratively put that number towards the operators that, hey,
Operator.
this is what we think, that as a community we can do it together. And now, we do manage, even from the fund managers side, that without knowing what the names of the investors or details of the investors, that how they're moving through that cycle of raising capital. Because, what we commit to the sponsors and what we show up on the finish line, getting that number there is really, really important, not just for the fund manager's success, for connected capital success, but also for the sponsor's success
Yeah.
as well.
And what I like what you said is that traditional LP will not know this, but you actually underwrite not only the deal but the market and the operator itself. So
Yeah,
there's in fact a lot of things would probably happen on the operator side than the deal because anyone can pencil out a really good deal. So it's great that you look into the market and the operators too.
yeah,
Now,
yeah.
uh,
Trust but verify. That's our motto. Because even really good operators, best in class operators, if they have really good track record, and by the way, the track record of the operator is the most important thing, that the team team is the most important aspect of everything, right? You bet on the jockey, not the horse, right? For all the best in class operators, if we still evaluate the individual investments, the individual deal, and then there has been times that the deal did not work out with us and we have said no to that deal. So
Mm.
it's very important what you just said, that we are investigating into that investment itself, and the investors have no idea that we are actually doing this. And there could be, I mean, we have investigated in so many deals in past couple of years, and we have rejected some of these investments, but these investments still went out and raised capital from different investors. So the investors will never know what that difference is, but it is a tremendous value for them.
So you mentioned on Fridays that you have this call for those who are familiar with capital raising, but they've done it independently. What's the first step for them if they want to get involved with your?
So the first step is connectedcapital.fund. That's our website. Join as a capital raiser. Right now it's free to join for the Friday calls. We might actually take that out because something that's free, people don't value it much. But we are, even at the free platform, we are providing so much access, so much education, and so access to this deal itself is really important. But while it's free, get that free access to the Fridays and at least get the tip of the iceberg. And like I said, it's just the tip of the iceberg. If you want to do a deep dive into what happens behind the scene, join the gold membership. Its barrier to entry is very low compared to other masterminds right now. But we can offer cash flow portal members or friends a special discount of $500, and also a 2-week free trial where you can actually jump on the calls for the gold community for 2 weeks for free and get a feel of what really happens in this due diligence call. You may not get access to all the due diligence material because we have to be very careful about when sponsors give us literally everything that we ask for. We have to be careful about who gets hands on that information. So you can get access to that 2 weeks free trial, and we can create a special code for your members. They can jump in and just see what happens on Connected Capital Friday and that 2 weeks, so that they can find out. And like I said, the barrier to entry is very low. The fees for the membership, for the annual membership, is very low. And come to think of it, even if you consider the cost that the third party underwriters or the background check that we are running, that itself is kind of a break even if you consider
Yeah.
all the deals that you're evaluating. And plus, we also negotiated better economics, and also getting to that 2 million level, you are getting a part of a better economics. So it's really multifold. It's going to come back to you. We also have many partnerships, right? I mean, I am also an expert, we think outside the stocks, in infinite banking. We have an infinite banking partner program, which, handles the cash flow problem that, I was talking about, being equity rich and cash flow poor. We also actually this Friday, I don't know when you will have this episode aired, but this Friday, which is I think 17th of October, we also have a partnership coming in where you can offer different value add services to your investors, and in turn get some affiliate percentage as passive cash flow paid to you, like estate planning and some entity creation, tax planning, etc. So those are really important aspect of a vertical value add that you can offer to your investors while solving your cash flow problems. So like I said, that it's by fund manager for fund manager. So as a fund manager, I do understand that cash flow is kind of a chokehold for many capital raise partners, and as well as syndicator team as well, right? So we try to solve, because I wish I had this when I was growing up and becoming a fund manager.
Yeah. And we appreciate that. I'll certainly, make sure we have to get this as soon as out as possible for that Friday call. So outside of events and, you also mentioned conferences, what's next for Connected Capital? Any, major events or projects coming up for you in the future?
Yeah, that's a great question. So Connected Capital is growing. We are adding more and more fund managers into our, core in the gold levels. And we do plan to get to an event, virtual event, maybe, early next year. And that event is going to not only just combine the capital raise partners together, but really, focus on what we can do on the kind of that line of human and AI interaction, right? Because when it comes to due diligence, a lot of AI, AI front end,
Cool. Yeah.
even if when it comes to underwriting, you have, something like a tool for underwriting. But when it comes to the AI and still the human interaction, we have to remember that, we still have responsibilities to our investors. AI has come forward, it has made things a little bit easier, but that human interaction, that perspective of looking at that data that AI has created, and looking at from the perspective of investors is really, really necessary. So, that conference will focus on, meeting for the due diligence, meeting on the line of the human and AI interaction. So that will be very interesting.
Well, very exciting. Very exciting. Yes, keep us posted. Now, last two questions. Why should capital raisers choose connected capital versus working alone or in smaller groups?
That's a great question as well. So, smaller groups, I have tried to do this in smaller groups because as a capital raise partner, I always thought that, what if we just have, three, four fund managers come together and do this together, right? Here's
Yeah.
the problem, right? For that four, five fund managers to come together, the choices are going to be different, right? So if an investment comes in, which is a multifamily, at least two of them are going to say that, hey, I have done enough multifamily. I don't need multifamily. I want diversification. And if you bring diversification, self-storage or mobile home park, the other two are going to say that my core is multifamily. I'm going to continue
Mm.
multifamily, right? And even if that happens, right, even if you go on like the same asset class, if the timing is not right, because it's not just about the decisions. I have always seen that, somebody's raising on something, or somebody is, personally facing some family challenges, right? So that four or five out of, like three out of or two out of that five fund managers drop off, your strength is kind of, becoming weaker and weaker, right? And to provide that consistently again and again, that becomes a problem. So when we have a bigger community and we have, bigger pool of fund managers coming in together, and not only to source the best in class operators. Here is one thing about best in class operators, Adrian. When you're a fund manager, unless you have a capacity, sole capacity to raise $2-3 million, the best in class operators don't even want to spend time
Yep.
with you, right? They don't want to, get on the calls, do the due diligence with you, because the due diligence is really nitty gritty details of going into the investments deep dive, right? So that's another reason, right? The best in class operators to even show interest, if we are a united front, if we are have the unity and a cohesive as a community, they look at us that differently, and they also get benefit from it, because now they just come at one place. Everybody asks their due diligence question in one place. Same questions are not getting asked by different fund managers, right? So it works for them as well. So the best in class operators, the best in class deals in diversified asset classes are coming through the network. The due diligence, right? Even if you're expert in due diligence, what if you have 10 deals coming in a week on your table? Can you spend that kind of time to go that deep level, arrange with sponsor, get them answer that question, have them send that documents to you? Now we have for Connected Capital, our VA supporting, looking at those documents, looking at what's been sent, and now after the underwriting is when you're actually spending that time in due diligence, right? So almost out of that 10 deals, good 60-70% deals are not even reaching you. When you're looking at these deals, I was a part of masterminds, right? The deals will flash on WhatsApp, the deals will flash on Slack, and sometimes I wouldn't even have time. So a good deal also go unattended because I just didn't have time. But now these three deals that are coming to your table that you're doing due diligence, now you are kind of securing that time and applying it only when it's needed. The strength of collective collaborative due diligence is now, helping us to manage that risk, stepping on less landmines. The risk cannot be eliminated, right, completely, but we can choose less landmines to step on, right?
Yeah.
And now, remember, when you had that range, right? I mean, the listeners, if you have, that you committed 500K or $1 million to the sponsor and you fell short, right? Remember those restless nights, like, okay, it's 920K now,
Yeah.
and my last investor is not coming in, or a couple of investors are just like going, they're not picking up calls, they're just completely dry, and the sponsor is like firm that you're gonna get this deal if you bring 1 million, otherwise you're not gonna get it, right?
Hmm.
So those sleepless and stressful nights, that gets eliminated, because what happens is, collaboratively we are committing that, millions of dollars. If somebody is saying that, okay, I'm going to raise 500K, and the other person is saying that, okay, it's 800K. Suppose the 800K falls to 700, but the 500K one actually can go do 600K,
Yeah.
right? So collectively, I have seen that it's always happening, that now collectively we are able to kind of reach to that goal, that objective there, right? And lastly, the economics, right? When you raise, no matter if you are a 500K raiser or 300K raiser or $1 million, if you get a bump bump, it's a collaborative bump for the community, and that bump is coming directly to you. Connected Capital is not creating an SPV where we are collecting, and then if we had created an SPV, we could probably keep some asset management fees or something on the top. But this is the returns that you're going to get directly, and on the top of it, I'm negotiating something extra whenever possible. So that's really difficult to achieve alone, let alone in that small group. So you have a choice to go back doing the old ways, facing the wall, hitting the wall every now and then. All these pain points that I talk about, from deal sourcing to the due diligence to raising that capital, just single person, and the economics, right? Or you can just be a part of the community at a very small cost, which comes back to you in many multifold ways, and be part of the family, because friends don't let friends raise alone. One of our fund manager, Wes, says that, and it has kind of stick to us. So we are here, Connected Capital, to raise together and grow together as a family. Because when you are successful, you do want to share it with somebody, and that's the family that we have been together. And you're welcome to join this family.
Well, if anyone's interested and yeah, would love to be part of the family, where can they learn or join the?
Love that. So connectedcapital.fund, not com, connectedcapital.fund. That's our website. And if you go on the website, and you can join as a capital raiser, for limited time, the free membership will allow you to just those Friday calls. But I would say that, why not just get behind the curtain, what we are doing in the due diligence call, in the Gold Insider call. So I will give you a code, and I'll set that up. Cash flow friends. How about that? All lowercase. So cash flow friends. That will give you a $500 discount, and just join and get that 2 weeks of free for the gold membership, and see, I mean, try it out and see to yourself, completely sure that once you get behind the scene, there is no other way that, you could think about doing this alone. Many of our fund managers say that, so I can confidently say that they say that I just cannot imagine going back to the old ways or doing this alone. So that is a special, offer for cash flow portal members. Please join, don't miss that, and we look forward to seeing you on the other side of Connected Capital.